All right, let's talk about a property that on the surface looks like an absolute slam dunk, the Banyan Tree Signatures in Kuala Lumpur. It's got the name, it's got the location, it's got all the prestige you could ask for. But you know what the numbers are telling us is a totally different story. So let's dive into this paradox.
And right out of the gate, the investment analysis hits you with this. This isn't some tiny footnote in the fine print. It's a huge warning sign. It's basically saying, hey, this is not a safe bet. This is a gamble. And that one quote really sets the stage for this whole story. A clash between this incredible promise and some pretty harsh market reality.
So let's start with the dream, right? Let's build the case for why anyone, and I mean anyone, would look at this property and think it's a guaranteed home run. Because on paper, the argument is, well, it's incredibly compelling. First up, and this is the big one, location, location, location. Banyan Tree Signatures is planted right in the absolute sweet spot. We're talking the Golden Triangle. You have a direct covered bridge to Pavilion, which is the premier mall in the city. And you're just a few minutes walk from not one, but two major rail lines. It just doesn't get more connected than that.
And then there's just the sheer prestige of it all. You've got that world-famous Banyan Tree brand managing the place. It's freehold, which is a huge deal for ownership security. You're right next door to a top-tier hospital, and you're perfectly sandwiched between the two most important business hubs in the entire city, KLCC and the new exchange TRX. It's pretty much the textbook definition of a blue-chip asset.
So far, so good, right? Sounds like the perfect property. But this is exactly where the story takes a very sharp turn. So let's switch gears, look at the numbers, and see how this dream actually holds up against the unforgiving reality of the market. With all that promise, all that prestige, you'd think the value would just skyrocket. It seems obvious, doesn't it? Well, it doesn't. And here it is, the number that just blows the whole perfect property idea out of the water. Despite everything it has going for it, the property has actually lost value since it was finished. We're talking a capital depreciation of almost 6%. So let me be really clear. Money invested here hasn't grown. It's actually shrunk. And you can see that drop so clearly here on this chart. Look at the initial hype when it launched. Prices were way up there, but just look at the trend since. Transacted prices have been on a steady march downwards, and the current median is sitting way, way lower. It just goes to show you that even a powerhouse brand couldn't fight against the tide of the market.
So this brings us to the central mystery, doesn't it? How on earth can an asset with a AAA location and a world-class brand be doing this badly? Let's try to unpack this whole contradiction.
You know, it really boils down to this fundamental conflict. It's like a heavyweight fight. In one corner, you have the building's individual strengths, the brand, the location, this promise of growth. But in the other corner, you have these massive external forces, a huge oversupply of luxury units, and just fierce, brutal competition that's dragging all the prices down with it. And let's get specific here. For years, the area has just been flooded with high-end condos, which means tons of competition. And Banyan Tree itself is a high-density building. We're talking over 500 units. When you have that many units fighting for a pretty small pool of tenants, what do you think happens to prices? They go down. And get this, even its biggest strength, that amazing location, is kind of a double-edged sword. Yes, the public transport is fantastic. But if you actually own a car, good luck. You're signing up for some of the worst traffic gridlock in the city every single day. All of a sudden, that perfect location becomes a massive headache. Okay, so with all these pretty significant challenges, you have to ask yourself, who would actually buy this property? It is definitely not for a passive investor who's just expecting easy growth. No, this is for a very specific type of person, what the analysis calls a ruthless investor with a very specific playbook. And the key here is a total shift in mindset. You have to stop thinking of this as a growth asset. Instead, you have to see it for what it is, a volatile income play. The goal isn't to sell it for more money later. The goal is to generate cash flow from rent right now while you accept the risk that its value might not go up at all. Success with this strategy really hinges on one thing: finding the perfect tenant. This isn't a family home. You're hunting for high-income expats, maybe corporate-sponsored staff, whose company is footing the bill. Someone who wants the convenience, the brand, the lifestyle, and couldn't care less about the traffic because they're walking or taking the train to work anyway. So the playbook is crystal clear. Step 1, you cannot pay the asking price. You have to go in there and negotiate hard for a big discount. Step 2, you focus all your energy on finding and securing one of those high-quality corporate tenants for stable income. And step 3, You have to be prepared to hold on to this thing for the long term, maybe for years, to wait for the market to finally sort itself out. So let's pull it all together now. We've seen the glittering promise, and we've seen the harsh reality. So what's the final verdict on Banyan Tree Signatures? When you lay it all out like this, side by side, the paradox is just so obvious. The pros are undeniable, right? Freehold, the Banyan Tree brand, that incredible connectivity. But the cons, wow, they are just as severe. A history of losing money, nightmare traffic, and just brutal market competition. And all of this leaves us with a really fascinating final question, one that goes way beyond just this one building in KL. When a market is absolutely flooded with options, can a prestigious brand name and a great location, all by themselves, ever really be enough to guarantee success? The story of Banyan Tree Signatures suggests the answer is a lot more complicated than you'd think.